Joining us. But I don't know whether to call this the Thought and Action podcast or the Keep Your Money podcast, but I will tell you this much. We have the pre IPO man in black, Johnny Cash himself, Aaron Dillon. Love this guy. Been working with him for
Uh,
the past couple of years, and he does wear black all the time, and he looks awesome. He's also tall, like me. We all look like little heads on the screen, but we're all, above 6 feet tall, including Tim, which is great. But I'm stoked. I love having a conversation with him every couple months, and hopefully we do it more in the future because the things are accelerating. And
mm,
we usually do these around offerings, and we're going to talk about the offerings. But I think what I want to do is kind of set the table. We have a lot of new listeners, a lot of people that have asked questions, and I think it would be really good before we talk about what's going to happen in March, which is the capital raise, to kind of set the stage for what is pre-IPO and just do a quick flyover of what we're even talking about. So before we do that, and I pepper Aaron with some questions, Aaron, why don't you take, 30, 60 seconds and just give people, your pedigree, your background, and just what makes you the guy when it comes to pre-IPO.
okay, so I'm a New York guy, so don't hold that against me, right? Manhattan here for the last 23 years, but yeah, I've been in wealth management, asset management for the duration. I was at Morgan Stanley and TD Ameritrade in the home office on their investment product team.
I won't hold that against
Founded
you
in,
either.
yeah, right, reformed. I'm reformed. But then I started an ETF company, co-founded it, which now is about $10 billion in assets under management, and held positions at FTSE Russell Indices. I started the wealth management division there, was a managing director, and then most recently was at a company that got bought by SoFi, and then SoFi went public, and that was where I got like a little taste of venture capital. They were a VC-backed company, and all of the clients that we worked in that division were VC-backed fintech. So fell in love with the space. So here we are. AG Dillon's pre-IPO stock asset manager, and we specifically work with families, like individual families, via their financial advisors, and we just help folks access this pre-IPO stock asset class with institutional rigor, right? So hopefully, really great research, great stock selection, great portfolio construction, and helping people kind of navigate and understand this emerging technology space so that they can have really successful investment outcomes.
Awesome. Well, we appreciate the access and
Yes.
and to
Yeah.
kind of set the stage, you know, we have markets that go up and down. People, if if for the time and date, if someone's watching this, we're taping this on March 6th. So we're about 7 days into the war, if you will, with Iran.
Right.
Questions come up in terms of like the market cycles. I want to talk real just about like this is a secondary market. This is not your public markets. So can you just talk about like what a pre-IPO, like what that even means, and then
Right.
also is there a cycle to that market?
Sure. Okay. So first of all, company is a company and a stock is a stock, right? Some stocks trade publicly and some do not, right? Most actually don't. So I'm sure there's a lot of business owners you guys have on the phone, right, or going to listen to this. You guys have stock. Your company has stock as a capitalization table. Odds are you may have investors, you may not have investors, but you own that stock or your investors own that stock. In theory, that could be publicly traded at some point, right? So that's all. Like what we're talking about here is the companies that are public, right, have made that decision to take that stock and trade it publicly. The companies that we invest into have high probability that they will eventually go public or be acquired by somebody, right? And they're actively bringing on investors and they're growing very quickly, right? So, there's growth stocks in the public stock market. These are effectively growth stocks in the private stock market, and we're buying those stocks. And in a similar way, like when you go to buy a public stock, you just go into like a Schwab or a Fidelity or TD, you call Erik, right? And you want to buy stock. So go in and go into a stock order entry system, be very technical. Go enter the trade and the trade will happen, but you're not buying it like directly from Amazon, the stock. You're buying it from another Amazon shareholder that's in the public market, wants to sell their shares. And that's how that transaction happens. In a similar way, you could, when you buy stock in the private market, sometimes what you read about in the paper is, OpenAI raises $110 billion. That just happened last week, right? That was a primary market transaction. So investors are coming in buying shares directly from OpenAI. Where we buy is through the secondary market, just like in the public stock market. We'll buy and sell from existing shareholders, whether they're employees or prior investors, and that's where we buy stock. So it's maybe a little novel in the concept that most people don't buy and sell private stocks, right? But the concept itself is the same as the public stock market, right? And that's effectively what we're doing in the private stock market. That's all.
Yeah. Access is growing. We're going to talk about that in a little bit because I think there's different ways to kind of access that market, and I think the way you do it is unique and candidly, in my thought process, better. But we'll talk about that in a minute. But take me through cycles, right? So some people have been doing this now with us for 2, 3 years, 4 years, all the way back.
Right.
Even I think we bought SpaceX. We didn't do it with you, but through another company in 2020. But take me
Okay.
through like the cycles of the secondary market. After COVID, we had these things called SPACs. I don't want to, get into like, SPACs in general, but we kind of have waves. So take us through kind of how the cycle is it the same cycle as the public market? And I ask that because if you're buying this, you kind of expect it to move in tandem. And
Right.
after asking, well, I'll just start with that and then I'll ask a follow-up. Does it move the
Yeah.
same as public markets?
I would say yes and no. Okay. I think over the long run, yes. Right. Over the short term, no. Right. And the primary reason I think for that is that folks that are participating in this private stock market are traditionally like more institutional in nature. Right. And there is illiquidity. There's more illiquidity. Right. It's not easy to buy and sell these things. It's like buying and selling a house. So you're not going to like buy a house today and then sell it tomorrow. Right. So there's just a function of practicality on how frequently you can transact. But yeah, but I think over the long run, the markets will mirror each other, right? And in the near term, there's a lot less volatility. So you won't see stock movements, bounce around in a very aggressive way in the private stock market.
hmm So take me through like knowing that, and I know we talked about this a couple calls ago, but why would somebody, and you're talking to all stocks, right? So if you have a little
Mm-hmm.
HVAC company and they have
Mm-hmm.
stock, right? That's a private market stock
Correct.
company, right? No, they're
Right.
not buying and
Right.
selling like we're talking about, but once you get bigger, and so in the same
Yeah.
way that HVAC company is one, SpaceX is one, or some of the
Right.
other companies that you've had, take me through how for the larger companies give me their relative size versus S&P 500 companies, just so people can have a
Yeah.
context. Like just because they're private, that doesn't mean that they're small.
Yeah. That's actually a great point. So the whole reason that my little business exists, right, is for the sheer fact that these companies are staying private for longer. Right. So there was a term called a unicorn, right? So, and that was when a company hit $1 billion in valuation and then they would go public. It was like a rite of passage. You hit a billion in valuation, you go public, right? And that's like a small cap stock. So $4.5 billion is the cutoff between, small cap publicly traded stocks and kind of like mid cap stocks, right? Mid cap publicly traded stocks. You'd hit a billion, you'd go public, and then you'd be in all the indices and everything, public stock market, and you kind of as they grow. So Amazon did that, Google did that, Facebook was higher, but like general concept's the same, right? So
So
all these
let's give people
great companies,
concepts. So you have like small
yeah,
cap up to say 4.5 billion, mid cap up
right.
to 4.5
I think
billion to like
like 15, 20, that kind of thing. I think
so like
that might
20
even be a
billion,
little
and then
high.
20 billion to it's just large cap above that.
Yeah. And then you got like, mega cap. That's like, the trillion Tesla, Microsoft, like, mega cap, right?
Right.
Call it maybe 500 billion and above that stuff,
And that's just
right?
the value of the stock, the number of shares times the value per share
Correct.
cap.
That's right.
Right.
Enterprise value. You got it. You got
Yep.
market cap. So that's the spectrum. Now these companies are staying private for longer. Like SpaceX has been private for 20 years. Okay. So you can imagine just life happens with people, like, not to be cheeky or silly, but like people die, right? So states have to change hands. People get divorced. They have to split assets. Those might drive needs to sell, right?
hmm
You could have institutions like pensions, endowments, and foundations, hedge funds that have taken a position. They have asset allocation guidelines, and if that stock grows to a certain level, they can't be allocated that much to one stock. They can't have that much in venture capital. They can't have that much in alternatives, right? So there's a whole bunch of reasons when time happens where people have to then pull the trigger and sell, right? Also, too, there's just like good portfolio management. If you got into SpaceX when it had a $2 billion valuation, and now all of a sudden, boom, it's $800 billion. It's a $1 trillion valuation, right? it's so valuable. You're like, man, I could sell half of this position. It's just like too much in one stock, right? So
Hmm.
it's there's a whole bunch of reasons. It all predicates off of the idea that these companies are staying private for longer. So then all of these we'll call it challenges present themselves. And then, of course, this is what people in the capital markets do and financial services do. We like rise to the occasion and find solutions to give liquidity to these folks that need to sell. And we do
Hmm.
that within the confines of the law and simplicity. So, water finds the right way to flow. And that's the same thing with product innovation and financial services and how kind of markets evolve, capital markets evolve and mature. And that's really kind of what we're seeing now. So huge opportunities in the private secondary market and a lot of liquidity. Now Eric, I kind of liken it now to like fixed income, right? So like I'm a New York City guy, right? So if I wanted to buy a New York City bond portfolio, like a municipal bond portfolio, I know I can do that. Okay. But I don't like actually know anybody to go and buy the New York City bonds from, right? So I would call into like Schwab's fixed income trading desk and they have relationships at JP Morgan and Goldman Sachs and Morgan Stanley and all their fixed income trading desks, and they can build me a New York City muni bond portfolio. If I needed to go and do that myself, I needed to call like Jimmy over at Goldman and Frank over at Morgan Stanley. They don't know me from Adam, right? So why are they picking up the phone and answering my phone call? The Schwab guy calls them, fixed income guy, no problem. Like, what do you need, Tim? Done. Like I'll do the trade with you. Easy. I call them up. They don't know me. So that's how this kind of pre-IPO stock private market trades. It's like a little high school, right? And people know each other. They know you're trustworthy. You're a good actor, right? You could, if you say you're going to do something, you follow through and do it. Those are kind of how this capital market works.
Yep. You've
In
proven
short.
yourself, which is good. So take me through like these, and you had a really cool, but I'm sure it's changed, chart for a year or so ago. Largest companies that are private
Yeah,
and versus the S&P. Like say SpaceX. Like how big is that
yeah.
versus some of the top companies? Where would it fall in the S&P 500?
Yeah, so SpaceX has like a $1.5 trillion valuation right now in the private secondary market, which is the largest pre-IPO stock. That would put it up in like the Microsoft, Google, Amazons of the world. It's that echelon. Like it's going to be a top 10 stock in the public markets once it gets added to all these industries and goes after it goes public. So I mean, huge, huge. OpenAI is at like 875 billion, right? Stripe's at 159 billion. Databricks is at 134 billion. I mean, these are probably top 100 S&P 500 stocks, right? So brand names that you could think of in your head, they're there. These companies are that size, right? And they have billions in revenue, and they have great brands, and they have incredible customer bases and good moats for their business, right? They're just very, very kind of well established and great businesses.
So
So
I'm gonna ask you,
that's the
those
yeah.
are all just facts, right? Those are just where they're at, their value, facts. So I'm gonna ask you a
Right,
subjective question. So that
right,
being the case,
yeah,
where make the case for me, and I know this is somewhat like a softball self-serving question, but I just think
yeah,
people need to hear it. Like,
yeah.
give me the case for why would you need to have at least some exposure to these
Yeah.
secondary markets and have some of
Hmm.
those, like companies plugged into a traditional portfolio?
Okay, so if you go back to 2008, before the iPhone came out, believe it or not, that's when the iPhone came out. That might seem,
That's crazy.
to me, that's not that far away, but like the world changed a lot from 2008, and right. If you look at the S&P 500 in 2008, it was almost like very little technology companies in there. Okay, fast forward to today, like the top 25, like all technology companies. Some of them are apps, like Facebook, right, or Meta, right? That's an app on your phone. So iPhones didn't even exist. There was no app in 2008, right, and prior. So technology is the primary driver of stock market returns in this country. Okay. It is like the primary driver of innovation and GDP growth in this country. What happened prior, like we were talking about earlier, because these companies would hit $1 billion valuation and then they go public. So as a public market investor, you could participate in that innovation and that growth and that technology cycle. And that's not happening anymore. Now these companies are staying private. Like SpaceX is going to go private or public, it's going to be a $1.5 trillion plus valuation. You used to be able to buy at a billion, and then you'd participate to the billion to 1.5 trillion. That's not happening anymore, right? So all these companies are staying private for longer. You're missing that innovation. You're missing that cycle, right? So what I anticipate is going to start to happen in like the next 5 years is people are going to start to show like, here's the S&P 500, here's the S&P 5, with this public stock, here's the S&P 500 plus the private stock, so kind of a blended public-private S&P 500, and here's the difference in performance. And I do think that that's going to be material, like especially for finance geeks like us, right? Like investment geeks like us. It'd be 1.5% a year, but compounded over 20, 30, 40 years. That's a huge difference in outcome, right?
Hmm.
So I think I think we're going to start to see some of those nuances. So it is important. I think it's important. I mean, like think about it this way: AI. Not to get into details, but if you think about pure play AI names, they're all private right now, and I think we could all
Okay.
agree AI is here to stay, right?
So we're gonna
So
we're gonna
you're
we're gonna
missing
get there
that.
because I think there's a discipline you have for doing that, and this is perfect because it leads me right into the next question. So it's not all like because I love the idea of like someone's gonna listen to this, they're gonna say like, oh my gosh, I'm gonna buy every company that hits a billion because they're all gonna go up, and I'm gonna get all that. But then I'm like, I think about companies like BlockFi. I mean, I remember walking around airports, Atlanta airport, I saw BlockFi stuff. I had friends with a BlockFi card. For the people that don't know what BlockFi is, it was basically like a crypto bank that blew up, and it wasn't their fault, but they did go to
Yeah,
zero. And so the idea of like, okay, just because something hits that billion, or just because they're a darling, if you will, in the secondary market, number one, it's like you were saying, it's harder to buy in, it's harder to get out. So if you see the
right.
winds changing, you may not necessarily be able to get out. How do you, and this kind of goes into your methodology with your companies, how do you select the proper companies to round out the portfolio with?
Yeah, that's a great question. Uh, so first of all, if I had the opportunity to buy 150 of these names, like in an index, like an S&P type 100 type index, I would do it in a heartbeat, even with the dogs in there, like you mentioned, because I do believe that that would be a great outcome. Just practically speaking, though, you can't buy 150 of these. You would need some ungodly amount of money to be able to buy that many stocks in the right proportion, et cetera, 100 and have 150 of them. So that's kind of one thing to think about. But where we start to answer your question directly, where we start is what type of technology do we want to have exposure to? So we kind of start with like a top down type perspective, and we think about what types of emerging technology we find to be interesting, where we think there's going to be kind of breakout opportunities, and then once we settle on those specific areas, then we start to look into each one of those kind of types of technology and say which stocks within this sector, if you will, or the scheme make have the highest probabilities for great outcomes, right? And that's kind of our selection criteria. But in general, too, we also like to look at companies that have a $5 to $15 billion valuation right now. We like to think of companies that have a lot of revenue already, so they have a good kind of substantial revenue base, have great brands, and have good customer bases, right? So those are kind of the call it high level criteria right now. In particular, though, I will say that that criteria has really come home and is driven home in this current list that we have for March here, because a lot of the companies that I think people are used to in the pre-IPO stock space, the OpenAI, the SpaceXs, the Anthropics, etc., they're what I would call like fully valued before they go to an IPO. So, like in other words, the opportunity's passed. Just wait and buy it on IPO day,
Hmm.
right? It's like you're that close. So you're not going to make a huge amount of return from now until IPO, at least in my opinion. So just wait till it IPOs and buy it in the public stock market. So there's other opportunities if you want to look at this asset class that you should be considering. That's not these kind of mega cap, frankly, stocks like
Right.
we were talking about earlier.
So before we talk about like this specific, well, let's talk about the offerings because I think it's interesting to see the evolution. If we look back a couple years, so take me through the kind of the three areas of AI that we've gone
Yeah,
through, the evolution of where we've come to now,
yeah,
and then we can talk about a little bit of what's coming now.
yeah. Okay, so the way AI is shaped out, I would say AI investing shaped out, at least in our opinion, is there's like three sub asset classes for AI. Okay, there's AI infrastructure, that's like semiconductor chips, AI chips, data centers, electricity, right? Other kind of infrastructure related, like fiber optic cables is becoming a big item in that space, right? So infrastructure. Then there's platforms, AI platforms. So that's like the Open AIs, the Anthropics, the XAIs, the Google Geminis, right? These are like large language model, platforms. And there's some other world models and some other things that are coming, but that's in general, that's the concept. And then last is AI applications. So those are like apps that sit on top of the platforms, the large language models, and then deliver specific solutions into the marketplace for particular, kind of demographic or customer base. So that's like the three buckets. We've been investing in infrastructure and platforms for the last few years now, right? So like Lambda Labs, Together AI, we had a CoreWeave position in the index fund. Like those were all infrastructure plays. Rock was a semiconductor chip company that we invested in. NVIDIA
Thank you,
bought
by
those
the way.
guys over Christmas. Yeah, very excited about that. So those are, that's infrastructure. And we're still like a big believer in the infrastructure space. And there's actually kind of another tranche of companies that are coming through or emerging right now. So we'll continue to do stuff in the AI infrastructure space. Then platforms, we like that space. We got in early for OpenAI, right? We made investments into XAI. Obviously now SpaceX has bought XAI. So those guys have merged together, right? But we like kind of that platform space. I think now those companies are fully valued. So that opportunity is kind of passed. And third, we've been waiting for AI applications. AI applications will be the biggest opportunity to make money in AI. Okay. Just like the App Store, there's two App Stores. There's Apple and Google, both have App Stores, right? And then there's thousands of apps on the App Store. So you can buy Google stock or Apple stock and you'll make money there, right? But then there's all of these thousands of apps that you could buy or invest into and participate in the growth there. And that's what's coming for AI. Now, we haven't made investments. I haven't recommended it or felt comfortable making investments in AI application companies yet because I didn't know what was going to be sustainable, like long-term enterprise value for these companies. Okay. So in other words, you don't want to start a business or invest into a business and then like OpenAI on a Wednesday decides, oh, we'll offer that product too. And then they launch that product and just decimate you. Like there is no value now to your business for your customers and your clients. And overnight you go to zero, right? So what is that thing that you have if you're an AI application company that's going to give you that long-term sustainable value? And that I believe in the last 6 to 9 months has presented itself, that investment case or investment thesis. And now we're like super high conviction on AI application companies, right? That have like this specific criteria. So that maybe just to answer your question and summarize, like, so AI, in our opinion, is three buckets: it's infrastructure, platforms, and applications, right? And we've been doing infrastructure and platforms, and now I believe the time is right to start to do applications. And you'll see more and more application companies from us in the future because I think this is the time, and there's a lot
And
of
you're
money to be made.
so
There, right?
your breakdown on these apps, which I think was really well done, is what makes an app worth. I mean, obviously revenue, right? So it's like, oh,
Yeah.
they make a lot of money, but there's the details behind it. I think are really kind of crystallize the opportunity. Like what needs to present itself from an app company in order for you to say like, aside from revenue, this is a worthwhile investment.
Yeah. So I think there's three things. Okay. One is forward deployed engineers, and I'll list them and I'll tell you a little bit about each one. Forward deployed engineers, open architecture on the model, and then outcome based pricing. So those are the three. You got to have the first two, forward deployed engineers and open architecture on the model. The third one's like a bonus. So it's like a cherry on top, right? The outcome based pricing. So like what exactly? And so if a company, an AI application company, has those two things, or maybe the three, right? If you're lucky, then I believe they have a moat. That's a long-term sustainable revenue base. Their customers are locked in. OpenAI, Anthropic, Google can't come out on a Wednesday and launch a product and take them out. Like it's a proper enterprise, right? Proper moat, right? So So to talk about each one of these is super quick. The forward deployed engineer is a concept that Palantir developed. Okay. And it's literally taking a software developer at the AI application company and putting it on site with their customer. So these are business to business deals. Okay. So that forward deployed engineer goes into the business. They take the business's proprietary data, they put it in a format and structure that the AI could use it from the company. They identify a workflow that needs to get automated. Okay. They set a benchmark for that workflow. So the human fails at that task 3% of the time, right? So the AI needs to be 3% failure, 3% or better for this thing to be properly automated. And then they'll come back and they'll literally go the last mile. So they'll connect the AI solution using the proprietary data and automate the workflow. Then after it's automated, they'll run it in parallel to the human. And where the AI makes an error, the human corrects. It's post training. And then after that's done, and now the AI has better failure rate or same failure rate as a human, that workflow is automated. And they move on to the next one. They move on to the next one. Move on to the next one. So next, you're 3 months in, 5 quarters in, whatever, you've automated 25 workflows every single quarter that no human will ever do again. Right? So you can see the compounding effect and the benefit that happens to businesses. But ultimately, what this forward deployed engineer means is that businesses can't figure out how to do this themselves. They just don't have the expertise in house to be able to automate this. So the AI application company said, okay, acknowledge, we're going to send our own people in there to make sure that you can automate these things and have a positive return on investment for every dollar that you spend with us. So you're literally willing. The AI application companies are willing to positive ROI for their customers, which is value. So then their customers, of course, will keep doing this. So that's number one. That's a moat. Imagine being in there, a company being an AI application company in there, being with one of their customers, automating 200 workflows. Even if somebody else, a competitor, OpenAI, shows up and says, "Hey, we'll do this for you," it'd be 10% less than what these other guys are charging you. You're not making that change. You just spent a year and a half implementing this. Your team knows the technology and is comfortable with it. It's proven to work. The forward deployed engineers, you know them. It's like that's Sam over there. Sam's a great guy. You know what I mean? I saw pictures of his wife and kids. Like Sam, the forward deployed engineer, knows all your proprietary data, knows how it's stored, knows where it's stored. I mean, you can see the level of specificity. That's a moat. Okay. That's a moat. That revenue is protected, I think. Okay. So forward deployed engineers, number one. The second one is open architecture on the model. So as you imagine, like a workflow getting automated, there's like task number one, task number two, task number three, task number four. The forward deployed engineer, if they're open architecture, they can use any model, can come in and say, okay, for task number one, we're going to use this open source model, Kimi K2.5, which is a great model, but it's a tenth of the cost of the Anthropic Opus 4.5 model, top of the line model out of Anthropic. It's really expensive. So they'll optimize the workflow. They'll use the right model for each part of that task to drive and maximize ROI, but also maximize quality. So don't sacrifice on the quality, but lower the cost. So if you have better ROI, return on investment, then you can automate more workflows. Okay, so it's almost like the forward deployed engineers, like a fiduciary responsibility to their customer. I'm not just going to use one company stuff, but use any company stuff as long as it's the best result for the customer, right? That's a super powerful thing and really drives a ton of automation. So those two things, again, that's a moat. And of course, you can imagine an AI application company as they're in talking with somebody in a particular vertical, law firms, consumer discretionary product companies that sell through grocery stores, like whatever, like, you can see these verticals and emerge and you're like, okay, for this task, for this particular task, we find that this model works best in this vertical. So there starts to become like institutional knowledge around which models work best in what scenarios for each particular vertical. That's very proprietary, right? And then implementing that, of course, in with their solution delivers better results too. So open architecture model, I think, is a very important one as well. And I also think it helps contribute to the moat concept too. So those two are the big ones. And then the third one's outcome-based pricing. So outcome-based pricing is like it's easiest understood as it relates to sales. Okay. So if you're a salesperson, you want more high qualified leads. Okay. And if I can get more leads sent to me further down the sales cycle, so kind of a qualified high propensity lead, my close rate should go up, right? I should be able to close more business faster, more revenue for the company. So, so AI sales agents that are able to deliver more meetings, more leads, right? So they're out in the world, people are coming in, they're interacting with the company, they're taking them through a sales process and then handing off to a human to have that human close. If they can take those leads further down the sales pipeline, sales cycle, and also get more of them, because someone called in at 1 a.m. because they couldn't sleep, and the AI picks up the phone or picks up the chat and starts to talk with that person. No humans doing that. Everyone's sleeping, right? So the AI is very happy to talk to somebody at 1 a.m., right? And boom, it's a lead. And like next thing you know, they're on the phone with the human the next day and they're getting closed, right? So that AI companies now, AI application companies are getting paid for positive outcomes. Every lead that I generate, you pay me X. So like you hear some of these guys talk, they talk about the AI, like, oh yeah, our AI gets paid a base salary, and then they get paid a commission on every positive out. It's like they're talking about a person. That's how the AI gets paid. But what I like about that as an investor is usually when you sell software, it's like, oh, it's $100,000 this year, and then we'll do a 5% increase next year. It's $105,000 in revenue for us next year from that customer, right? It's outcome-based pricing. So you start this way, it makes, ooh, this works. Head of sales is, ooh, this AI sales agent works. This is great. Like, can I do $1 million next year? Right? If I give you 100,000 this year and it came back and it generated $200,000 of revenue for me, if I give you $1 million, will it give me $2 million? Like, yes, it will. Let's do it. Next year, can I give you $3 million? Will it give us $6 million back? Yes, it will. Let's do it. I mean, you are going to keep feeding that beast, okay,
Mm-hmm.
until you start to get diminished returns. It's like a saturation point, right? So that, from a technology perspective, I think is really powerful because you can accelerate revenue fast. So as an investor, I like that. I like the idea that, you could effectively have, these AI sales agents, and it's scale too. Because I mean, I don't anybody who's ever ran a sales team. I've ran a sales team at one point in my life. It's hard. Like you got to find the people. That takes time. You got to interview them. You got to hire them. You got to train them. Even after they're trained up, they got to get on the phone and like fall on their face for like 3 months, right, with people before they got their pitch down. They understand the product properly. And then like you're like 9 months in from the day you started to interview people to the day that that person's in the seat actually productive. AI sales agents, they're all trained up and ready to go before you even turn them loose. And you can scale those up. You can have 1,000 of them tomorrow, right? So that's really powerful. So outcome-based pricing is like the cherry on top, right?
I think it's fun because I hear that, and I know some of the questions. We'll talk about them at the end because I want to talk about the offerings, but the question is always like, oh my gosh, what's going to happen? I think there's two things that people worry about. Like, are we oversaturated in terms of investment in AI?
Uh,
And is AI going to take all the jobs? And I hear what you're
mm,
saying in terms of like, oh my goodness, but I think it just repurposes. Well, we can talk about it at the end. Before we talk about that, take me through the offerings. Lazo,
okay.
Harvey, Glean, Together, and 1X. I mean, they all have, because it's kind of why we set it up this way, they all have those three defensible pieces. Not all of them, but at least the top two.
Yeah.
But I think it's helpful for people to hear the company, kind of the area or sector that they're really targeting, like Harvey with legal, whatever. And then also kind of your idea in terms of potential, kind of growth over the next
Outcomes.
5 years,
Yeah.
and give people to like an overview of like when you're looking for companies like you said 5 to 15 billion and all that, but like in terms of a performance outcome, what's kind of the
Yeah.
the base level performance outcome you're looking for with a lot of these?
Yeah. So the target outcome's like a 3x in 5 years time, right? And that would put you literally in like the top quartile, the top decile of venture capital outcomes, venture capital fund outcomes, right? So kind of in fact, in print, maybe you can be a little bit better than that. So that's the target. That's the right? And in 5 times. But just to run, so I'll run through the companies kind of real quick, right?
Yep.
So in the AI space, I'll just start with AI application companies. We have three, right? Lazo, Harvey, and Glean. Lazo is an earlier stage company. Okay, they are focused on their AI sales agent and marketing solutions for companies in the RV space, RV dealerships, marine is a boat and jet ski dealership, agriculture dealership, as well as kind of elective healthcare. So these are like clinics that do like Botox, ED drugs, GLP-1, that type of stuff, right? So that's the verticals that they're playing in. And I love this company, right? So it's an earlier stage business. This is the earliest stage company that we've ever participated in. We're actually direct on the company. So this is a primary market transaction for us as opposed to a secondary market transaction. But I do feel like this company can 10x in 3 years' time, right? But again, earlier, so more risk, right? So it's risk return. So earlier company risk, but I think the potential outcome on the upside is very, very high, right? Harvey is a legal AI application company, legal focused AI application company. They have incredible market share. They work with 50 of the top 100 law firms globally. That's a great market penetration. They effectively help, and again, they have forward deployed engineers and open architecture model, right, as well. So they help law firms take their proprietary knowledge and implement AI solutions. So you can imagine the benefits and pickups that the law firms would have. I was not super pumped about them when they were just focused on legal. Okay. But what's happened in the last 2 quarters, is they started to develop workflow solutions to help the law firms communicate easier and better with their customers, clients, and other people like taxes. Like you have to think about it in terms of like a global multinational like acquisition. Publicly traded companies buying another company. So they got operations in Europe and the US and Australia and South America, right? So there's law firms all over the place. They got this publicly traded companies, so financials, it's like insider information, all these different nuances. They got tax people involved. They got accountants. Ernst and Young doing the thing in Europe, and the whole thing, right? There's a lot of people involved in this transaction. So Harvey's been building out solutions where it's workflow. Who can see what information when, which is very important to have good governance around that, and how can we help facilitate and improve the flow of that, any kind of approvals, et cetera, that might happen. So that's been wildly popular. And now the law firms are recommending that their corporate clients become customers of Harvey. So it's like Walmart's in-house counsel, Target's in-house counsel, Home Depot's in-house counsel. That is incredibly powerful increase of target addressable market. So the revenue opportunity for Harvey, I think, just expanded like tenfold. And that's why it's on the list. Okay, because it meets our investment criteria, but now the target addressable market's huge. And I really like that. So that's Harvey. And then Glean is it's what I would call like an all-purpose AI application company for large, like Fortune 500 companies, right? So they have like Samsung and Booking.com and Intuit and like these very like large publicly traded companies. Glean is in there helping them automate all of their workflows, whether that's HR, operations, finance, sales, marketing, etc. Glean's in there, helping them sort and automate those workflows. Arvind Jain is the CEO. He was one of the first guys at Google. Okay. He also took a company, started a company from scratch and took it public himself called Rubrik. The guy's like a 2-time, founder for what it's worth. So you want to throw Google in there, he's already a billionaire. So I like investing in companies with guys who are already billionaires. Like their heads just like, oh, let's do it again. I'm gonna start another company, right? So endless, like obviously with his own capital, but then also other people's capital. He's got tons of access to capital, right? He's got a proven track record. He's delivering good results as CEO, and his thing was search, right? He's a Google guy, so the original outlook for Glean was to come into a company and organize their proprietary internal data so that people can use it, employees can use that data more effectively and be more efficient. And of course, AI, that's the first thing that a forward deployed engineer does, is organize a company's data. So it was a natural kind of extension to start to offer AI agents within the business using forward deployed engineers. So that's Glean. So I really like all three of those. as I mentioned, like Harvey is kind of like a 10x in 3 to 5 years outcome. This is my opinion, right? I think Glean is in like the 3, 4, 5x. Okay, in about 3, 5 years time, and I think Harvey is probably a 3x in 5 years time. That's my estimate. So each of those have their kind of their own like risk, subsequent risk profile. But I think it's fairly it's a good lineup across the three. So that's
Right.
AI application companies, and then maybe just to hit real quick on the other three. So
Just
we
just
have
to
one,
just to you, I think
yeah.
you misspoke just real quick. You said Harvey was a 10x, but Lazo was the 10x, Harvey was the 3x,
Oh,
Glean was the
yeah,
5x,
I
right?
apologize.
Yeah. Yeah, yeah,
Correct.
yeah.
Yeah, Lazo's the 10x,
Yep.
Glean's the 3, 4, five
And
x
and
and Harvey's
and I
the
have to
3x.
and I have to say, like, we're not, there's not a guarantee. This is purely Aaron's research. I'm not promoting anything, whatever. I feel like I need to say that because my legal
Yeah.
team will make me say that. So let's say it right
No, no,
there.
yeah. My
But
my
it is
opinion. Yeah,
but it
my
is
opinion.
an opinion steeped in years of research and doing these trades and understanding it. So, for what it's worth, I think it's worth something. It's out there. So
Yeah.
that said, let's
That's
go to
that's
Together.
outlook. Yes, yeah,
Yep.
yeah. Together AI is an AI application company. Okay, they're or sorry, infrastructure company, and they have database. So they buy GPUs from NVIDIA, and then they make those GPUs available in like a cloud. So they would compete with like a Google Cloud or an Amazon Web Services or a Microsoft Azure, right? Um, the investment thesis, and this is the third AI data center company that we've invested into in this kind of, they call it neo cloud space, right? And the reason, the investment thesis that we have around this is NVIDIA's largest customers, Google, Amazon, Microsoft, are all making their own AI chips. So imagine being the head of sales at NVIDIA. You're trying to sell obviously as many chips as you can. All your best customers, where you're doing like 90% of your business with, are making a competing product and telling you that they're going to be using their own chip in the future. So what are you going to do? You got to make your own customers. You got to make a second tranche of customers, right? And that's what they're doing. So also too, what's nice about NVIDIA, if you're the head of sales, like you're sold out on chips for the next 5 years. So whoever you give those chips to, it's like giving them revenue, right? So NVIDIA is smart. They're handpicking these companies. CoreWeave was the first. Lambda Labs was the second. Together is the third. Okay. There's other companies that they're investing into in the AI infrastructure space as well. And on top of that, they're also investing into the company. Okay. So they're giving them chips. They're allocating chips, which they don't have to do. They can give them to anybody. So allocating like a material amount of chips to these AI database companies, which is revenue, immediate revenue, and then they're also investing into the companies. So they're effectively getting them up to scale where they could work with like the largest enterprises in the world, and people can feel comfortable about working with them. And then they're effectively like manufacturing a second class customers for themselves. Like very strategic, right? I think so.
Hmm.
That's a great investment thesis. I mean, it's self-serving comment, right? But I think that's a great investment thesis for this space, right? For AI infrastructure.
Well, you've seen
So
it
I,
too. Like, you've seen it with CoreWeave, you've seen it with Lambda, so it's not like it's foreign. I mean, the last
yeah,
thing we're going to talk
yeah,
about is robotics, and that's foreign. I mean, it's
yeah,
new. I shouldn't say it's foreign. I mean, people know about it. You've got videos of it.
yeah,
There's Will Smith's in a movie about it, but
yeah, yeah.
it's it's
That's right.
it's just foreign as an investment concept. But this is just get in line. That's all it
100%.
is.
Yeah. So for database, like this is it. I mean, you kind of mentioned like, are we over invested kind of infrastructure AI, right? And we can talk more about this, but the thought is, my opinion, we are we don't have enough compute. And if you think about that forward deployed engineer concept where you're automating a workflow, automating a workflow, automating a workflow, we're going to start to see this huge pull through from enterprises as these forward deployed engineers get in and start automating things. And you have to remember, every single time that one of those workflows get automated, so the human doing it, now the AI is doing it, and every run is compute. So as we start to get more things automated at company A, company B, company C, company D, the demand for compute is going to go up exponentially higher from where we are today. So all of these AI data center companies are going to be beneficiaries of that. So to me, the infrastructure play in AI is a very special place. Okay. I think there's a lot of good money to be made there from an investor perspective. I think we're going to be continue to see massive amounts of investment into the AI infrastructure space and chips and data centers, and it's going to become obvious. I think in like 12 to 24 months time, when all of this automation is happening, everyone's gonna be like, of course, and then it will be obvious that these are smart investments to make, right? And people will be scrambling to find ways, I think, to get to them.
Kind of like
Okay, that's
you
the
made
other
this
guy.
connection last time, like just kind of the fiber optic cables with the internet, like laying all these internet cables, and yeah, they laid a little too much, but it was all eventually used because they're like that's what you need to actually make this entire beast function. You know, this is like the
And you have
lifeblood.
to do it ahead of time.
Yeah.
You have to do it ahead of time too, Eric, right? Like, I mean, think about it. You can't lay the cable and then like people start to use it immediately the next day. It's like, like literally dig dig the trench and then put the
Hmm.
cable. It takes time. Same thing with the data centers. Like, you can't just stand up a data center in a day. That takes time, and you got to get permits, and you got to get the electricity, and it's like it's a process, right? So if you're one of these data center companies and you got all your customers telling you the demand, their demand forecast for the next couple of years, like, oh my gosh, like I'm not even close to having that much compute ready to go for these. I need to invest into this stuff fast
Hmm.
now to be able to meet that demand. And I won't even be
Yeah.
able to satiate all the demand I'm getting from my customers. So,
I can't believe
um,
we've been talking for 50 minutes and I was thinking to myself like we're going to knock this out in 30 so that Tim can ask questions and I'm like, "Oh my gosh. All right. So let's talk 1X so that Tim
yeah,
can get a
what
couple questions and we don't keep him on until like, the afternoon siesta." I'm like,
no,
it's fun
no
though. This is
problem.
great.
Yeah, so humanoid robot. I'm a big believer. 1X is a humanoid robotics company. 1X Technologies, humanoid robotics company. I'm a big believer in humanoid robots. This is early. When you talk about emerging technology, we're early in the humanoid robotics emerging technology space, right? There's like four companies that I really like in this space, U.S. companies. There's a whole bunch of Chinese companies, but I'm not keen on investing into private Chinese companies, right? But 1X, Figure AI, Tesla has their Optimus robot, right? And then there's another private company called Extronic. So we've made investments in Figure before. Their valuation's a little rich right now, so we're going to just wait for them to kind of grow revenue into that valuation. But 1X is like prime for an investment. It's like at a $10 billion valuation right now. So I think that's an attractive entry point for the space. And they're now offering, you can buy a 1X robot on their website today.
Did you buy one?
I haven't. I'm in like a deep negotiation with my family about it. My seven year
Put
old,
it in the garage.
out of all people, I have three kids. My 7 year old, the youngest, is very against it, oddly. So I think I can convince him. I got my salesman's hat on, so
I
hopefully
want
we'll have one
I
here
want
sooner
to
or later.
see it on one of these calls. I want you to like I could totally see it in a couple months. It's like bring, what are you
Oh
gonna
yeah,
call it? What are you gonna name it? Betty? Like bring Betty over here, Bring
it's a
Bobo.
oh for sure, it's a real thing. I think we're gonna. I think so. My thesis on this, in all seriousness, is I think we're all gonna have one of these in our house within 5 years time, 5 to 7 years time, like everybody. Okay, and we'll have them in our office too, and they will be very useful, and they will feel like part of the family. Okay, and I do think we'll give them names, as you mentioned, Eric, and I
Well,
think
you have to.
yeah, yeah.
I mean, we
I mean,
call Alexa and Siri like I mean, those are random names. And you can rename like and if you have too many Alexas, you got to name them something else. So I got a Ziggy and I can't remember the other name, but they have a bunch of weirdo names. Um,
yeah, yeah, yeah,
but I mean
yeah.
they work.
I, I believe it's coming. Like, look, and if people kind of look at me like a little side eye on this humanoid robotic thing, but I think what's important is I do think certain applications will come sooner than later. Okay, like elder care, for example. So, if mom and dad are not doing well, they're still getting around okay, but man, I'd like really wish that somebody was there, like keeping an eye on everything, make sure things were cool. You could hire an at-home like nurse or whatever, but that's like 100 grand a year. It's expensive, right?
Hmm.
Or you can get a humanoid robot for $20,000 one-time cost.
Well,
That seems like a lot
talk
better,
about Tesla.
right?
Like, I think the correlation you have with these self-driving cars
Mm-hmm.
versus, I hate to say it, like a humanoid robot that's like learning. They learn.
Yeah,
Make that correlation because I think for an investor that's kind of on
yeah,
the fence, this is a
right.
very interesting concept.
Okay, so really, all of these are all robots. Okay, a car is a robot. A robot.
Hmm.
Humanoid is a robot, right? So they're all robots. The thing that's powering the robot is the AI. Okay. And that's the key thing. So the key thing on like Tesla has had hundreds of thousands, millions of cars on the road with video cameras collecting all of that data. Okay. It's been collecting all that data and they've been doing that for like 10 years now. So now all of a sudden, boom, 10 years in, they got all this data. They trained the AI to a level where the AI can drive the car now and not need any human intervention. It drives actually, in fact, better than the human. That's the tests that are coming out. So, so that's 10 years worth of real world data that they've been accumulating that they're pumping into the AI and now they're releasing out, through the cars. So, and that's full self driving. So in a similar way, the humanoid robots need all that real world data, right? And it makes sense too, because if you think about it, it's like, everybody's house is different, okay? But, maybe we all have dishwashers. Well, my dishwasher is different than your dishwasher, different than the next guy's dishwasher. So, like, the humanoid robot comes across the dishwasher. They don't know what this is. They pull the user manual off the internet. It's the wrong version. So they got to like work through that, or you come over and show it to them. Now they know for that dishwasher, that model, this is how you do it. And they told all the other robots that,
They've told the
right? So
robots.
now all the other robots now know how to use that dishwasher, right? Or maybe the back door in your house is a little, unique and you got to pull it towards you and like lift it up a little bit and then the deadbolt will dead, right? Well, like a robot's not going to know that, but it figures it out and shows you like, oh, and then all the robots know, oh, so not all doors close like super easy and the deadbolt just deadbolts. You got to like, you might have to jiggle it a little bit and then it locks. Like they learn this stuff. So like you can imagine just like a human would learn it, right? The robots start to learn these things. And then of course, if they come across a door that doesn't shut, they're like, oh, I need to like troubleshoot this. It's not that I'm just not doing it correctly. There's something unique about this door that I have to sort through. You wouldn't really have to
Hmm.
tell a human that. A human just knows that, right? Through lived experience. The robots have to learn those things too. So that's just a function of time before they get all of that data,
Yeah.
right? It's not
Yeah.
the physical robot. The robot itself can do any of this stuff. The big thing that they had to solve was the hand. And now they have enough point of dexterity for the hand that it's almost like a human hand. It can hit, swing a hammer, it can pick up an egg, right? It's a very hard technical problem to solve for. So they
Yeah.
solve for all these things. Now the big challenge is like that world model, the AI needs to be able to have enough data to do that. So companies that can get these robots out into the real world and do that at scale, so they can actually make them and get them out in the real world and to start accumulating that data, will stand to have more useful robots faster. So Tesla just switched over two of their factories that were making cars, and they're going to be making robots now exclusively.
That's
Right?
awesome.
One X is
I mean,
anticipating.
again, I'm not promoting any particular investment, but to me, this is the most interesting one because it's like the next phase, right? We've
Yeah.
kind of gone through, like you were talking about, the iterations of AI, and now we're getting into the usage of it, right? We've laid the cables, we have the data centers, we've got the platforms. Now we're building on it. And this is
Yep.
what was the number that they think? What does Musk think we're going to have robots in how? What's his forecast?
8 billion in 2040, which is 14 years from now.
Okay, so
So
how many
I mean,
people are
even
on
at
planet Earth?
8 billion, and there's 340 million, 330 million in the United States. So I anticipate this is what I'm saying. Like we'll have two. Like I think everyone will have two. You'll have one at your house, one at your office, right?
That's
Because
wild.
we're like the richest country in the world. So of course,
Yeah.
if there's 8 billion of you on the planet, they're going to be more than one. So think about it. It's 330 million, 340 million Americans. There'll probably be 600 million robots
I mean, we got robot cleaners and
helping
stuff
us.
too.
Yeah.
All
So
right,
like it yeah.
let's do
So
this.
even if he's
Just
half
so
right, though, Eric, even if he's half right, that's still a very good investment opportunity,
I
right?
find it to be fascinating. I mean,
Yeah.
I know certain things scare people. Before we talk about, we'll have 10 minutes of just like random questions, which we'll talk about. But Tim, I know you're there, but you don't have to pop on. If you don't have any questions, let me know. But if you do, I wanted to give you a chance to ask. Okay, Tim's not asking, which is totally fine. So let me pepper you with some questions, Aaron, and we'll hit them for like 10 minutes, and then we'll wrap this up. So people
Okay.
ask, these are just things that people sent me or ask when I talk to them about it. How does the war impact anything that we're doing? Does it or not?
Um, I think it impacts Anduril for sure. So we didn't really talk about Anduril as a company, but it's an AI defense technology company,
Right.
right? So I definitely think, not only just the war with Iran, but also I think conflicts that are happening with Israel, the stuff in Ukraine, the stuff in Venezuela, which kind of put drones on the spotlight too. I mean, Ukraine did that certainly. Venezuela, I think, did that. There was a whole we just over technologized those folks in literally the matter of 24 hours. Got rid of their president. So and now we're talking potentially Cuba. I guess coming after Iran. I read that this morning. So like it seems like there's going to be an increasing number of global conflicts. Um, Not to like whack politics, but like that as a stated fact could benefit, uh, military defense companies. Anduril is one of those companies. So I do
Right.
think Anduril will stand to benefit from this trend. Um, the other businesses, I don't think will really have any kind of an impact one way or the other. I mean, obviously, if the as with any war, if it gets a little perhaps
Okay. That's good.
intense,
So
like
like
that could have a macro impact. But I don't think anything unique to the particular stock that we're talking with outside of Anduril, where it
so
would be positive.
take me through over investment in AI. Are we over our skis? Is there too much infrastructure thinking about together? And then I'm going to follow up that question with, are things overvalued? So are we overinvested
Right. Okay.
and are things overvalued?
Okay. So I get this question a lot. Where I
Yeah.
kind of where what seems to be best from like a thought exercise is like talk about what the end game is going to look like, and then
Hmm.
have a discussion on what's going to happen between now and then. So I think most people now agree, like without question, that AI is going to be a bigger part of our lives. Robotics will be a bigger part of our lives, right? Both personally and professionally. Okay, I think most people are starting to realize now that AI will. There's going to be like a change in the way people work. So some jobs that existed will no longer exist, and there'll be new jobs because of this technology, right? So all of this AI impact is going to be very real and material, right? It's not just going to be like this nice thing that we have off on the side. It's going to be internet-like impact. If I took the internet away from you, you wouldn't know what to do because most of your life now happens through the internet. It's email, it's text messages, it's video calls, right? I mean, all these things happen over the internet. I think AI, and most people agree, AI is going to have that similar impact, right, to our life. So, like even on this call, Eric, like you were mentioning, can you hear the background noise because there was somebody outside your window? That's AI. So there's an AI compute right happening in the background to get rid of that background noise. So so it's going to be ever present in our lives. So everyone agrees with that. Now it's a question of how long is it going to take us to get from here to there, and what is that process going to look like to go from A to B, kind of beginning to end. And that's where people tend to have like a lot of discussion and disagreement about what's what, right? Which frankly, that's where the investment opportunities are,
Right.
not for nothing.
So
But
take me through
but
this
that's it.
question because this is a follow-up as well. You talked about, automating these workflows that a human is usually a part of, and a human will never have to do it again. So obviously people
Mm-hmm.
are being, I say eliminated, but say jobs or functions are being eliminated. Does that mean that
Right.
jobs are being eliminated, or do you see over the past couple of years as a, and we're still early, but do you see as things are being eliminated, humans being removed from companies, or do you see them being like repositioned? How does that look?
I think it matters in the company, right? Like I think you could see like a value company, so a company that's got a lot of market share, okay, and they're well established business and perhaps issuing a huge dividend, right? So they're like effectively acknowledging the fact we can't use this capital to invest into other things and grow,
Coca-Cola.
okay? Yeah, JP Morgan,
Yeah.
right? I mean, like these are huge companies that are massive and they're not going to double in size, you know what I mean, in the next 5 years' time. That's not realistic. So for those types of companies, yeah, I think the AI is going to come in and probably remove a lot of those employees, right? Um, Now you can make the argument, well, those companies could move into new product areas. They could move into new geographic locations, which is true. So those, maybe in some instances those things could happen, right? But if you have like a Steve's candy company, right? Like that's a Warren Buffett like favorite, Steve's candy company. I mean, are they going to like use AI to double it? Probably not. They're just going to use AI in their ops and finance teams, and maybe there's 33% less humans or 50% less humans on those teams. That being said, the growth company will use that efficiency to double down on growth. Okay, so maybe operations jobs go away, but sales jobs increase. Maybe U.S. jobs go away, but they're launching in Europe, right? So those jobs businesses. So there's going to be, I think that shift will happen, right? Where resources and capital will go towards functions that are in line with shareholder value, right?
Hmm.
So, you won't need to push people around anymore. The AI will do that for you. So now you as a human can do things that an AI cannot do. Be creative, have human connection, get on a plane and go see somebody and have a steak dinner with them to build trust, like all of those things, right?
Have you
So
seen
I
this
think that,
AI agent? It's weird because I saw it as an article where the AI agents are hiring humans to do things because the agents need, can you deliver this? This person needs whatever. And the
yeah,
agents are hiring humans to do real world activities. Have you seen that?
yeah, I have seen that. And I anticipate we'll see more of that too in the future. Like, I do believe, like, this is where it's like, people can agree on the end game, but like, how do you get from point A to point A? Like, I think most people will agree these AI uh, solutions, large language models, etc., will be smarter than humans. I mean, it's smarter than me. ChatGPT is smarter than me. Things like a doctor, a world class tax accountant, world class financials, all rolled into one. You can ask that thing anything, and it will come back with like an intelligent answer. Is it the best? Is it right 100% of the time? No, but it's like 80, 90% good in any field. So you could tell me, is it smarter than me or is it not smarter than me? I think it's smarter than me. Okay. Now, to your point, Eric, like you could start to say things like, well, how useful is it? Which is fair. And I think the usefulness is going to start pulling through in the next year or two. And that's where these things can start to act like super autonomously. The key thing there is they just don't have the context. So, in my opinion, this is like how the sausage is made. In the next 2 or 3 years, we're all going to get very comfortable sharing all of our data with these AI models. The models are already good enough. What they don't have is the context, right? And to put it into like maybe human terms, it's like memory. So if you have a wife and children, the reason that those other humans are important to you is because you have memories of them, right? If you got hit in the head and you forgot everything, and you showed up with those people who you love very much, right? Today, tomorrow, you got hit in the head, you don't remember anybody. They walk in the room, you'd be like, it's another group of people. You're my family, okay, right? It seems really like uncomfortable, but it's the memories that make those people important. Likewise, if the AI doesn't have any context, it has no memory, it's not very useful, right? So what's going to happen in the next 2 or 3 years they call it context. The AI is going to have full context on your personal life and your professional life. And when the AI has full context and can access that full context, this is a very challenging technical problem, but it's like effectively solved and it's going to start rolling out to people. That's going to make these AI models exceptionally useful, right? Because it never forgets anything. So what you did a year ago, it will remember in detail, right? The decisions that you make, the thought patterns that you have, like it's going to be really, really. So that's where you'll wake up in the morning and you'll be like, "Hey, AI assistant Sam, like, what are we doing today?" And it will be like, I really want to focus on revenue opportunities. Is there any like leads that I haven't followed up on, or people that have made reference, or check social media and see if anybody's in my area that's done X, Y, and Z. Like, done. Come back. Give me a list of 25.
So you're
Yeah,
you're you're naming a couple things that are so it's fascinating because there's a human element that it's helping us achieve, right? Are there people here? It's not like do it all for me, I lay around and don't do anything. It's like it's helping. And I think that's
for
the
sure.
accelerant side of it because you know this will be a fun thing to follow up on in like a couple months, but privacy, individuals, we can choose to turn it on or off. Businesses are opening up their books completely. Like that's the whole opportunity set we just talked about. They're
Yeah,
just like we're willing to give you our context as a business because we want to optimize from a revenue standpoint. The dollars are making it worth it. To
yeah,
humans, it's like is it really making my life better? It's not really, I don't live my life personally on like a revenue basis, right? But I do
Right.
want to maximize my day. So if it's helping me,
Yeah.
like if, especially like, look, I'm more of an introvert, but like people that are extroverted, if they're like, tell me where there are people around me that I know or that I might want to know or that would be fun things that are going on or whatever, you'd like never miss anything again. But you need to
Yeah.
know, like, when I Google what I like. But if something was out there that had a context, if you will, of all the things that I'd done, and it was constantly kind of feeding me real life stuff. Now, again, like you could say that's a marketing idea and somebody's making money
Yeah.
on that. And maybe they are, but it is making your life better too.
For sure.
So
So,
it's possible to do both.
two things. Yeah, two things on that. So recently there's been this open source project called OpenClaw, right, where people are running
Yeah.
AI models like locally on these like high powered, Apple Mac machines. But they basically that Mac has full memory. So you start to tell the AI, the OpenClaw AI stuff about yourself, right? And then it's living with you and it's understanding what it's doing. You're having conversations with it, right? And some people are doing really interesting things. Like there was one fellow I saw, he connected it to all his security cameras in his house. He told the AI that he wanted to lose weight and that he wanted them to help him, the AI, OpenClaw AI, help him monitor what he was eating. So he went to go and get some M&Ms out of the cabinet, and he got a text message from the AI. Hey, Steve, I see you're reaching for those M&Ms. You might want to put those back, buddy. Remember, but it's like useful, right? Like accountability on the weight loss stuff. And I also saw people who set up cameras in their pantries and in their refrigerator, and it monitors food use, and it's connected to Instacart. So anytime you run low, it automatically just orders groceries,
Wow.
and then it's telling it, hey, I have a family of five. We want to eat really healthy this week. Can you come up with some recipes? And then if we don't have the groceries, can you order those groceries and have them delivered to the house? So like, yeah, efficiency here, just like you mentioned, right? Also, too, I think on the business side, I think businesses are going to be the earliest adopters of this. Okay.
Yeah.
So already, if you've ever worked for a big company, you sign like an agreement with that company. Any work product that you
Hmm.
make while you're at the company is property of the company. This is the work laptop. Anything that you do on the work laptop is property of the company. The cell phone, same thing. Phone calls, text message, property of the company. So there's already this concept that you work for a business, they own anything that you do. They pay you a salary, they get these rights to your stuff. Now, imagine that in the context of AI. So now you can, I mean, a lot of people record every Zoom call that they're on, right? You call customer service and they record the phone call. I don't think it's too far of a stretch where like everything is being recorded. There's cameras in the office. They're seeing who's talking with who, when. There's like lapel pins that are always on, listening to everything, record everything you
Well, that's what
say and
Claude
hear
does, you know?
with clients, yeah, with customers, with colleagues within the business, right? There's solutions where they're recording everything that's on the screen, so they could be like an AI Eric or an AI Aaron, and you can leave the company, but
Okay,
your
last
AI will
question.
be there, right?
Last question, because
Yeah,
I think this is awesome, and we're going to totally do another one of these. Do you think this is a random question someone asked, and I was like, I want to know what your take is. Do you think it will be possible using AI for someone to have a 1 billion valuation company with one employee?
yeah,
And how soon do
yeah.
you think that'll happen?
I okay. So first of all, there's already people out there doing stuff like this and selling businesses. Like this fellow that did OpenClaw, that was one guy in Austria developed OpenClaw, and he had it as an open source project. Okay. There were some like tangential people helping him out, but it effectively was one person. Um, so I think short answer is yes. I think we're going to have a billion valuation company. I think those will probably get gobbled up, just like the OpenClaw guy. I mean, he launched that thing and hundreds of thousands of people were using it like 2 or 3 months later. And then OpenAI came and effectively hired the guy. The buzz was that they gave him $1 billion pay package. So that you could argue was the first $1 billion company, right? Like it wasn't disclosed, but like, yeah, you know what I mean? But there's a couple developers out there who are like building businesses and are generating a ton of revenue, right? I think if they were like what I think we'll probably see happen, and this is where it will be like the first. I would argue there's probably already $1 billion valuation companies out there. Just the VCs haven't like pulled the trigger to say, hey, we're going to invest, $100 million at $1 billion valuation into this guy's company. It's one person using AI agents, and they're generating $15 million a year in annual run rate revenue, and it's one dude,
That's
right?
insane. I think
So
it's
like, what
fascinating.
revenue multiple? What revenue multiple would you apply to that, right? So I like as investors, like if I came to you guys and said, "Hey, I have a great company to invest in. It's one guy. It's John."
Yeah. I mean, it
You
does
know
discount the valuation because of what happens to John. Something happens
what?
to John. You know what I mean?
Exactly. So like, but you'd be like, man, I don't know if I'm ready for the one guy. What's the value? What's he asking? Well, we're going to invest at a $1.2 billion valuation. He's raising $75 million. You'd be like, oh man, it's one guy, like one person. That's insane.
But
You know what
that's
I'm
what's so
saying?
crazy.
We're
That
not
I mean,
there
it's
yet. Yeah.
when you think through these things, and again, that's why we got to have another one. We got to have just like a philosophical conversation because it's
Yeah.
like
Yeah.
this stuff is all of this is like, the previous hour was like facts,
Yeah.
thoughts, where is it going, whatever. But when you start to get to the applications and you kind of skate to where the puck is going, that's why Grok was so good. Because you're like, hey,
Yeah.
look, but that was kind of easy to see. It's like this is really expensive, this isn't. This costs a lot of energy, this one doesn't. It's like very simple, like how do we, cause effect, whatever. But
Yeah.
this is
Yeah.
more
For
like,
sure.
okay, if it's all being used, what could it be used for? And there are like OpenClaw, these things that are happening that are very usage based and very effective right now. That I think if
Yeah.
people understood the context, I think that number one, they'd
Yeah.
be less afraid. Number two, they'd jump on to some of these opportunities and they'd see them in a way where you're like, wow, it's already happening in a
Yeah. I mean,
more than just
I
one
think
anomaly.
so. That's what I mean by when I say how the sausage is made, Eric. It's that because I think for those that can navigate that nuance from point A to point B. Everyone agrees on the outcome, but how do you go from point A to point B? That's where there will be big winners and big losers, right? To me, my investment philosophy with these companies is like what I talked about with AI application companies. We could have invested in Harvey at like a $4 or $5 billion valuation, no problem. I just didn't see where the moat was.
Hmm.
So I still think it's a buy at the $11 billion valuation. Okay. But I'd much rather get into a company after I know that the investment thesis is rock solid. Okay. So maybe you got in a little bit later. Maybe the return isn't going to be quite as good, but you significantly reduce the amount of risk.
I think that's
Right.
important from a diligence standpoint. I think just as for investors to kind of hear kind of the diligence, perspective. Okay, you got 3 minutes. I have to go at
Okay.
11:50 because I got another meeting I got to get ready for. But talk through diligence because I said I was at the very beginning. I forgot to ask this question. Diligence. Why? Because there's a lot of ways to do this now. Link to a forge. Like there's different ways to access secondary markets. Actually, instead of me talking about high level, I want to ask you a very specific one. People will
Yeah.
come and they'll say, I can buy, say SpaceX. I can buy SpaceX at 1,500,000. What is the difference between buying at a defined price and then buying the way that you do, where you aggregate investors and go out and get basically you do price discovery? Can you talk about those two?
Right. Well, so first of all, I would say like if folks come and present you with the number, I mean, sure, you could do that. I just would say you don't know if you're getting fair market price or not, right? You're just getting that quote that's in front of you. So I think with most people when they make purchasing decisions, they do price discovery to make sure that hey, is this price that I'm getting quoted actually a good price? So that's what we do. We have 70 institutional counterparties and we go out and solicit offers from all 70 of them. And on average, we get like 16 offers back. To me, that's good. That's great price discovery. And we can rank those best to worst. And then we do, counterparty due diligence to make sure that who we're investing with is best in class. But that to me, that price discovery thing, Eric, is really important because I've seen our offer spreads that we get on those 16 offers is like sometimes it's like 50% wide
Five
between the best
zero.
offer. Yeah. So like you can get your face ripped off. And then of course there's other nuances too as it relates to this market. What's the counterparty? If you're buying through a fund, like where does that fund have the position marks versus where you're getting quoted on the price? Like there's some things to be thoughtful about there, right? And also too, I think, the brokers are fine, okay, but they're brokers. So they don't really have a fiduciary responsibility to you. Like I am a investment advisor, so I very much want to make sure that people know what they're getting into. I want to make sure that they understand what we're doing. When I go out to market, I have all of my investors in the funds interested in heart first. So I'm making sure that we're doing everything that we possibly can to get the best price possible with the best counterparty possible, so that we can get a good outcome for people. So that's perhaps another difference too. It's kind of a broker versus investment advisor dynamic.
I love it. All right, Man in Black, the Johnny Cash of the secondary markets. I love it. We're
I'll
gonna do
take
this
that.
again.
I'll take it.
We're gonna do this again in like a month or two. And
Okay,
I want to
good.
do it. I want to talk more high level. This whole thing. It moves so fast. I feel like if we talk every six
Yeah,
months,
right.
there's like a huge set, difference. So,
Oh
um,
yeah.
Can I add one thing, Aaron?
yeah,
When you get an agent to do your job and you got your little pale pen and he's learning everything about you, you could take your roadshow. I'm sitting here thinking about all these companies, these boards. I'm thinking about a board meeting. All these people that need somebody like you to interpret what they're hearing in pieces and bits, and they don't. And the staff is coming to them with all these and they think, well, you could do that. You could do a great job at that.
Yeah. Well, I
Which
tell
is
you,
what you
Tim.
just did.
So Tim, what you just articulated was the sales pitch for these AI application companies and the investment piece. That's the forward deployed engineer, right? So like literally, I've
Yep.
already been talking as we've been out in the market talking about these AI application companies. Folks are coming back and saying, "Hey," advisors are coming back to me and saying, "Hey, I have a client that wants this. They need help. This guy needs help. He is a business owner." So they're like partnering up with Glean, and Glean comes in and says, "Okay, we're going to be your AI automation partner."
Yep.
And they're
Yep.
helping them think through all of those challenges that you just articulated.
But think
So
of all the
you're
boards that are out there that
spot on.
want to see a human being standing in front of them as a start to this process. There's a market there for sure.
I believe that. I believe that. Yeah, I believe that. So
But
yeah,
thanks. It's
we
great.
live.
It's fascinating
Thank you,
yeah,
Tim. Yeah, we live in interesting times, man. This is the best. I think the
for
next
sure.
5 to 10 years are going to be absolutely incredible, right?
Yeah.
For
Yeah.
humanity, for people, for
Sure.
Americans, and it's going to be a lot of fun for as investors too. So I'm
I
very
agree.
excited.
All right. Thank you.
Aaron, thank you very much.
Thank you, Eric. I appreciate
Yeah,
you, man.
man.
Thank you.
You bet. Talk
All
to
right.
y'all
All right.
soon.
Bye.
Okay.
Bye, everybody.